Buy, borrow, and die. Is that a great strategy for your financial future? We're going to go over if it makes sense for you in today's video. Hi, my name is Zachary Jensen. I'm the managing partner here at TaxWise Financial Services. And today we're going to go over the buy, borrow, die strategy. This is a strategy that's very famous on social media. We got a lot of questions from our clients here. So in this video, we're going to separate fact from fiction and go over if it makes sense for you. So why is the buy, borrow, die such an interesting strategy? For certain high net worth individuals, buy, borrow, die offers one of the most tax efficient ways to preserve and grow wealth across generations. At its core, this strategy capitalizes on the three key realities of US tax law. Number one, unrealized capital gains are not taxed until sold. Loan proceeds are not taxable as income. And three, assets passed to heirs at death gradually receive what's called a step up in basis, which means that there's no gains to the heirs when receiving them. So by purchasing assets, borrowing against them instead of selling, and holding them until you die, an investor can effectively fund their lifestyle without triggering any large taxable events. A lot of people with large companies, large public companies do this. Famously, the richest people in the world do this with their public equities at Amazon and Tesla and these sort of places. So this preserves capital for compounding and avoids unnecessary sales and leverages historically low interest rates through banks. And the more and more you have to lend against, as far as asset value, the better rates you're going to get. And at those levels, you usually have a better banking relationship. So when executed correctly, this strategy allows investors to spend today while their underlying portfolio keeps growing, creating a cycle of increased net worth growth rather than shrinking it. And for someone with a more normal net worth, this sort of strategy can work well for folks that have a blend of stock and real estate. So who does this strategy work best for? Buy, borrow, die is not a one-size-fits-all approach. It's most effective for folks with significant appreciated assets, so particularly those in taxable accounts in stocks or real estate holdings, which selling would trigger large capital gains taxes. Stable or growing asset bases, right? Making sure it's not as volatile. That allows you to lend up to higher loan to value amounts, which as you'll find out, especially with stocks, if you do a large loan and the market drops a lot, you can get what's called margin called, where they sell securities to pay off your debt. So want to avoid that situation. If you're comfortable with debt, that's another big thing too. A lot of investors don't like debt. People think debt is not good psychologically. Definitely can understand that here at TaxWise, we're less risk adverse. But for folks with, let's say, modest home equity, retirement accounts, and taxable investments, this strategy can work today in a smaller form that scales over time. So how does it work specifically? If you have, let's say, a larger stock portfolio, the process begins with buying quality long-term growth assets like index funds, et cetera, right? You want to make sure you don't have a lot of volatility. And then what you can do is get what's called a margin loan against it. These margin loans usually don't carry any principal. You just have to pay the interest, and you can pay it back however you want. There's no sale, there's no tax, and it allows you to have a creative payback structure. So, and at death, let's say you die and you've got, let's say $10 million and $3 million in debt. Well, that net $7 million will pass to your heirs after the debt's paid back in the estate tax, tax-free. An example with real estate would be, let's say you bought a few properties a year, and then you, in 30, 40 years, eventually when you do pass, you've taken out home line of credit or cash out refinances. All that sort of debt that you've been accumulating on your balance sheet would act in a very similar fashion. The real estate would get stepped up, meaning that your heirs wouldn't owe any tax when they receive it, and all the debt that you had would get paid off in full. So some major pitfalls to avoid with this strategy: you don't want to get over leveraged, right? So if asset values drop in a market downturn, real estate correction, etc., lenders can determine repayment or reduce your credit line. And securities-based loans are particularly vulnerable to what I mentioned earlier, which is the margin call issue. Interest rate risk, right? So borrowing costs money, right? So you need to make sure you've got good relationships with your banks and that you're not borrowing at too expensive of an interest rate for that time. Certain stocks that you get loans against and then get margin can be in the 6 to 7 to 8 to 9% range, depending on your account. And it usually can go lower if you have a better relationship with your brokerage or bank. You need to make sure that you don't experience what's called a liquidity crunch, where you need to cover extra interest payments without forced sales. So never lend yourself the most you can get. Always make sure you have a buffer. And of course, the law could change. So Congress could reduce or eliminate the step up in basis, which is the main value of this strategy. So best practices to mitigate risk, right? Make sure you're borrowing well below the maximum loan to value thresholds, maintain diversified assets and avoid any sort of correlated declines, use fixed interest rate loans when possible, and make sure you're on top of all the latest legislative changes in capital gains and estate tax rules. And of course, if you don't want to pay attention to that, you can hire a firm like us who watches over it for you. Here at TaxWise, we help our clients save as much tax as possible to achieve their goals and have helped clients through this sort of situation. So if you have any questions on how it applies to you, reach out to me in the description below, and we'll talk soon. Thanks so much for watching, and have a great day.